This is Bobbie Jean, and I'm here with Chip today, and he's a real estate attorney here in Jacksonville. Thanks for coming out today.
Anytime. Thanks for having me.
Well, everyone knows it's January, and we're in tax season, and that means homestead. So what can you tell us about homestead, Chip?
So in Florida, the way that homestead works is that Florida is very good about allowing you to have one property that you designate as your primary residence, and they award certain protections for that against creditors. They also have tax breaks for that. So the big one is a $50,000 tax break off of what is taxed on the property. So generally speaking, depending on the county and the millage rate, it's $700, $800, $900 a year that you can save on your homestead property.
Okay. Another thing that's been brought to my attention is if you actually sell in the last year, you can do portability credit. Can you tell us a little bit about that?
Yeah, sure. So homestead portability is very simply defined as the difference between the just market value and the assessed value of the property that you just sold, as long as you had homestead on that property. Okay, so Florida is trying to keep people in the state. They're trying to keep people in the state with primary residences. And so they're awarding a tax credit called homestead portability, or the Save Our Homes credit. And so if you've sold recently, the rule with it is you have 2 years from January 1st of the year that you sold. So not 2 years from your sale dates. That part's a little tricky. So if you sold last year, you have until the end of this year to file for the homestead credit, the portability credit. And so what that is they'll give you the $50,000 homestead credit that you already get. And then if there's a difference between your just market value and your assessed value on the previous property that you sold, you can also take that with you and tack it onto the $50,000 that you're not taxed on.
Okay. So maybe you could just recap about some of the deadlines so people understand those.
Yeah, so you have to be in the property by January 1st. Okay, so you have to buy the property. Moving in is kind of a gray area, but you have to have the deed of the property recorded by January 1st of the year that you want to take advantage of the homestead credits. Then you have to go down to the tax assessor's office for the county and actually file the paperwork by March 1st.
Okay. Well, that sounds great. Is there anything else you'd like to say about any savings that people could be doing for tax season?
Any savings for tax season? Have a good tax attorney.
Well, that's great. Thank you all for listening.